Good morning, guys. How are you all? I hope everyone is cool. Today, just not interested to trade anything. We'll just trade the market, talk about something, but not interested to frame any trade. So, if you find any opportunities, please go for the trade. I will not push the button. No trade is valid for me today because today's market is off. You can see here, bank holiday. So, tomorrow is gonna be the first day for trading. Tomorrow PM session is the high probability, in my opinion. By the way, guys, if you can hear me, just let me know. Everything is clear. It should be clear because I think they have fixed the internet speed. There should be, I mean, there will be no buffering. I hope so. Let me know, by the way. Good morning, Seema. Seema? Seema? Kuba, what does it mean, Seema? Good morning, Khurshid. Ares, good morning, brother. Tamimi, how are you, brother? Everything is good, brother. The funding tick 5 live account. Funding tick 5 live account. They will give you back the money. Uh, I think you guys already know that funding ticks quit, so they are going to give the money back. If you have some profit, they will split the profit into 19 to 10. That means they will give you 90% profit as well as. So yeah, they are going to quit. It's the bad news actually because funding ticks was really so cheap, but now they decided to quit. They will give you back the money. Good morning, Kishore. Hey Dora, good morning. Thanks for the penguin. Muhammad, walaikum salam. Good morning, brother. Fatty, good morning. And thanks for the penguin, brother, again. Good morning, Livingston. Racha, funding ticks farm closed. Yeah, I already got the mail from them. Objectives 4 days trading 1170. What funding is going not to receive my reward? Uh, you can just go to their website, and if you are eligible to get the profit, they will give it back to you. Otherwise, they will just give you back the money you have spent to buy that account. Audrey, good morning. Thank you, brother, for confirming. Sophia, good morning. Yeah, thank you. Good morning. Good morning. Short. Jamlika. Kuba, Siema means hi. Okay, Siema. Sophia, thanks for the penguin. Jeffrey, good morning, brother. So, what I was saying, today's bank holiday, so really not interested to trade. I am not going to push any button. We'll just read the market to see if it works the way I think it is going to work or not. We'll just look at that. Tomorrow we don't have any high impact news. Then Wednesday we have kind of news around 8:30. President Trump is going to speak and annual meetings, whatever it is. We have around 8:30. The whole day was the is actually the WF annual meetings. Not a good thing, by the way. Thursday we have the CPI around 8:30, so nothing to worry about around 10. Friday is EMI around 10, nothing to worry about. Overall, this is the week. We have to let this week go, and the next week, after that, I hope we're going to see the good price action. I really don't know how to say that because the current situation, Iran, then also Russia and America, like everything is going around. Not good actually. The world is not calm. They are at the door of some sort of war, I guess. So, depending on everything, I really don't know what to say if we are going to get good price action or not very soon. But we have to go through all of these things because it will keep happening. But still, we'll try to see if we can find some good entries or not. But one thing you have to remember, just follow one thing, and that is sometimes I see that just one bad day and you say that you blow the account. It's nearly impossible to blow the account. If you blew the account, that means you're not ready to trade the prop firm or to spend the money. Uh, First, you have to work with your discipline, you have to work with your psychology, you have to stop. You have to stop. So, in a bad day when you are losing, you are keep losing and you are blowing your account. 5 days you are going good, you are making money, and the sixth number day you are going to blow the account. It's not trading, brother. So, I hope if you still in a bad day blew your account means you need to work a lot on your psychology and your risk management or the money management. I love to say stop after two loss, stop after one win. This is the easiest way to control the psychology or the discipline things, risk management, money management things. And if you go like this way, you're at least you're not going to blow your account. That's for sure. So actually, most of us blow our account because maybe we take a losing trade, then we think, okay, the next trade is gonna be a winning day, winning trade. Then the next one is also a losing trade. Like in a bad day, we'll keep taking the losing trade. Sometimes what will happen after three winning losing trade, maybe you will get a one winning trade, and that one winning trade is not enough to mitigate your loss, and then you are going to stop after some sort of mitigation, and then you will go again, you will take another lose, and this is how you will blow your account. This is the this is the simple thing that keep happening with every single one of us because we don't know how to stop. We don't want to stop. We know that after five losing trade, we are going to get one winning trade, and then in a bad day, we are going to get another five losing trade. But still, just for that one winning trade, we keep losing, keep losing, keep losing. At the end of the day, we are going to blow your our account. Please make sure this is a hard rule that you should not breach, and that is two loss, stop. Just stop. Don't trade in that day. Come back tomorrow. Again, you took two loss, stop over there. Then come back again the next day. That day, when you are going to get some winning trade, stop over there. You got one winning trade, stop over there. Come back again tomorrow. And this is how you will grow. I know it's very slow, and you say, brother, this is how if I take two loss today, and tomorrow if I get one win, still I'm in loss. So what is going to happen? The next day I'm gonna take another two loss, then maybe we are going to get another two loss, then we are going to get one win. Like still you will survive, still you will grow if you have multiple accounts, still you will grow, and slowly but definitely you will get your payout. In the meantime, maybe out of 500 account you will just blow one account, but the rest four account, three account will give you the payout. One payout is equal maybe 10 funded accounts. Okay, so for example, you got $1,000 payout, you can buy another 10 account by that $1,000. If you go for the Blue Guardian futures, maybe you will be able to get another maybe how much 17 to 18 accounts by that $1,000 payout. So out of five account, if you are able to make one account as your payout account, still that one account will give you the profits. That is the only way to grow in this market. You have to have, there's two rules. If you don't fulfill these two rules, you're not going to get the success from trading. First rules, you have to have multiple funded account, at least five funded account, or maybe three plus funded account. And second rule is you have to stop after taking some specific loss. So according to your money management, if it supports two losing trade, at least two losing trade, or maybe three losing trade, depending on your risk size, depending on your leverage, depending on your stop loss. So just count how much you are willing to lose in a day. For 50K account, I don't think so it's it's better to lose more than $400 in a day. So you have to stop after $400. So one trade should be like $200 risk, maximum $200 risk. So that if you lose two loss, I mean, if you take losing trade, you are going to lose $400. Still, you'll survive because your maximum loss for most of the accounts, funded accounts or challenge account for 50K account is kind of $2,000, $2,500. So you don't need to worry about blowing that account. That is the first thing you have to let out from your mind, that I'm not gonna blow the account by one day, even if it's really bad price action for me and I'm keep losing, still it will take 5 days to lose one account, one funded or challenge account, whatever it is. This is the only way. The more slower you will be, the more money you will earn from this trading industry, and the faster you will try to get the payout, the faster you will blow your account trading journey. So, man, this is a very simple math, but most of us are not agreed with this. Even if we understand this, every time we are doing the same mistake, we are blowing the account, we don't want to correct ourselves. We keep looking for some new, hidden secret or some like ingredient that will make us profitable. Every single trade is gonna be the winning trade. That will never gonna happen. Never ever. Okay, so the faster you will accept your loss and you will stop, the faster you will get your success from this journey. So some people called it like your expense, business expense. So you will blow some account, of course, you will take some losing trade, of course, but they are actually the expenses of your business. Still you will grow if you follow, or if you are very strict with this rule, just that rule: two loss, stop; one win, stop. You have to have multiple funded account if you if you really want to be a successful trader. Otherwise, if your time, you're passing your time like the way you are doing for last few years or few months, then you can keep growing, keep going, keep going, keep going, and you will learn this in a hard way, in a very pathetic way, in a very burning way, that actually it's not possible to be a successful trader without being disciplined. So I just don't want to say discipline because it means a lot. Most of the people keep saying discipline. In other words, I will just say loss, stop. One win, stop. Have multiple funded account. You have these two things fulfilled, and you'll be a profitable trader. That's my challenge. If you are not being a profitable trader, you'll come back and tell me, brother, I just did it, but still I didn't get my payout. If you can prove me wrong, I will never say this again to any of you again. Okay, so please prove me wrong first and then take your decision what you should do. Thank you for this little chit chat. I really would love to close this. I don't have anything to say. We'll just go through the price action. Short, like no expectation, nothing. But in short, we can see what is happening over here. This buy side liquidity. This is the minor sell side liquidity or internal liquidity. This low is an internal liquidity. I'm not interested to see this low is going to be taken. I mean, this low will be cleared before clearing this highs or high, whatever you say. Without clearing this, I really don't want to see this is going to be cleared. Instead of that, this should be clear, and then this market should start to go higher again for the buy side liquidity. That is so far my expectation. However, I was really happy. I'm really happy because if this liquidity is being taken before February, maybe I would be in a no man's land in that area because of premium and discount explanation I've done last Friday. But as it didn't clear that, I'm very happy to see that, because until February, I don't need to worry about the target. And when the February will come, when I'm expecting the good price action, uh, if I avoid all the current situation, world situation, if I avoid that, then I can expect from February second week, in other word, according to ICT, 10th February, we are going to see one-sided run, and that is gonna be only bullish. However, we'll see how it is going to work. And if I look at this price action over here, you can see this market closed here on last Friday, and then it opened here, which is gapped down, and market is just falling. So today's bank holiday, of course. The way it is going to react, I really have no idea. But however, I'm gonna mark this low around here to see if it can, my market can take it, and then can it reverse. That is my first interest to see. However, from 4 hour chart, I think it has already been cleared, and yeah, it's already been cleared. Below this line, I have some gap over here. If this market can trade this gap, that is the best case of scenario. So I'll mark a gap over here from 4 hour chart. This one, entry gap. So if it can fall, come here and reverse from there, that is the best case of scenario. I hope so. It will work like that way. It's not going to reverse randomly from here. Instead of that, it will come here, then it will start to reverse. All of this buy side liquidity, as you can see over here, it will go for that. From hourly chart, this is the gap around 9:30 or prior to 9:30. Again, I'm just doing this but not going to follow whatever I'm going to explain here, not going to follow them. I'll just read the market to see if the PDRs are going to be respected or not. Today's holiday, no trade is valid for me, no pushing button is valid. You don't want to follow the rules, up to you. You are always welcome to go with your decision, with your expectation, with your own plan. I really appreciate it, guys. I don't want to trade, I don't want to trade anything today, as it is the bank holiday. You can see today's market is going to close around 1 p.m. New York local time, so it's gonna close within 3 hours 32 minutes. Within 3 hours 32 minutes, market is going to close. However, this is the hourly gap. As long as this market is below this hourly gap, I'm not interested to look for any sort of buy. I'd love to see it will fall for this gap, and then it will start to go higher. If it doesn't work like that way, instead of that closed above this hourly gap, then this volume imbalance is gonna be my target. Like, I'll just mark this volume imbalance with the or the new week opening gap. The quadrant level and the lower quadrant will be my target. But right now, my first priority is this market will fall more around the opening, and it will come at least over here. This is the entry gap from the 4 hour chart. At least over here, if it went through this, which I'm not expecting, but still, if it went through this, then I will look for the last FVG. Now, from the 4 hour chart, sorry, hourly chart, I can compromise my gap from 4 hour chart. This is the gap, so I'm gonna compromise it to hourly gap, so it's gonna be like this. So this is the gap I'm more interested to see. This market will fall, and then if it went through this, then this last FVG will be my target at first. I really don't want to see that. I don't think so this is going to happen like that way. From 15-minute chart, I have this clean highs over here, I have this buy side liquidity here, I have this buy side liquidity there, have some gap over here, which is the liquidity void. So they are gonna be my target. But of course, I will look for those target where this gap is gonna be broken. More importantly, market will close above this last FVG from 15-minute chart. Then maybe I'll start to look for some sort of buy. Otherwise, I'm more interested to see it will keep falling. Come here to that area. If I come to the 15-minute chart, and you will be able to see there is a huge gap from 15-minute chart, this candle high, that candle low, just not going to mark it. Instead of that, gonna keep this hourly gap, because that is more beautiful around here. All of this liquidity, you see trend line liquidity, I'm not good at trend line liquidity, but here it seems like some sort of trend line liquidity that can be the target. That is the opening, 9:30 open. Again, remember the market is closed. Okay, so if you come here, regular trading hour, you will be able to see nothing over here, because the regular trading hour is still closed. Nobody's trading over here, so it's kind of no hedge fund, no big what to say, I mean, the big bank, nobody is going to trade around this area. Okay, so nothing is happening over here. However, we'll see if it can keep falling and can frame some sort of sell at first. So right now, over here in 1 minute chart, as you can see here, market just retrace from this gap over here. It has been respected that gap, went higher, failed to clear that high, then fall, little retracement, went higher again, took that high, failed to clear the extreme high, and then fall again. So if it happens, that means this high failed to clear that high, that old FVG or the highest FVG or the bullish FVG is really important in that type of scenario where market actually failed to clear the extreme high. Extend it to my right, as it can be respected so many times. So I really would love to use that gap to see if I can use it later or not. And right now, came here, cleared that low, trade this area. I think some sort of FVG around here or anything. Really don't know what is, because my interest is to see it will keep falling. I really don't want to see any sort of bullish PDRA is gonna be respected and then market will start to go higher. I really don't want to see that. I want to see it will keep falling. So market open, it will keep falling. That is my expectation, at least until here. Then if it can go higher, we'll look for that. Let's see, can find something over here. Fall retracement to the minor liquidity, some sort of buy side liquidity to be clear before falling. Guys, please don't forget to push the like button, subscribe to our channel if any of you are new over here. If you don't like it, just give me the dislike button, but do something. It's holiday, no trade is valid, no pushing button is valid. Just read the market, but at the same time, if you would love to trade, you can go for that. I hope you will understand that why I'm looking for this market. The will keep falling. If it was a normal day, that means it's not a holiday, I would never look for sell. I would look for buy at first, because there is a big opening gap, market gap down. Then I would say that first this market will go higher, and then if it falls, we'll look for that. But as today's market is off, I don't want to see any twist over here, because no his fund is trading. I just want to see it will keep falling. That's all. This small gap, observe this gap. Observe means like, sometimes when you are with me in Discord and I show you something like observe this gap. So some of you can think that observing means like go for the trade from that gap. No, observing means you're not going to push the button, you're going to see if that gap can be used. There is any confirmation, can I hold my bias by using that gap. Observing, okay, just you will observe, not pushing button. So for example, I'm observing this gap means what I am actually waiting for, why this gap is important. The first question is why this gap, there, like, there should be some reason, right, why this gap. Because while this market is falling and cleared that line, which is the sell side liquidity, more importantly that low, maybe is gonna build some sort of sell side liquidity or whatever it is, that extreme liquidity line is over here, or that low is over here. So while this market is falling, if it really would love to keep falling, then this is the last AVG that should be respected and market should keep falling. That is why this gap is important to me, as I'm expecting something from this area. Either this will go higher because the liquidity has been cleared, or it will keep falling by using some sort of gap that is near to liquidity. So I have found this gap. I would love to observe that gap. Can this market respect this gap and keep falling? Otherwise, if it doesn't do that, instead of that keep falling like the way it is falling, of course we will have nothing to do, right? It's falling means the falling knife. Don't try to catch, never ever try to catch the falling knife. I'm expecting this market will keep falling. It doesn't mean that I'm just gonna push the button over here without any kind of confirmation. I need the confirmation to push the button. So if I get the confirmation, I'll go for the trade. If I don't get the confirmation, I'll not go. I'm not gonna chase the market. It's called chasing market. Please uh, make sure that you're not chasing it. Good morning, Archana. Good morning, sister. Good morning, Jamie. Good luck today. No good luck. Actually, I'm not going to take any trade. We'll just read the market. That's all. Not interested to push the button today. Today's holiday. Please don't go for the trade. At least don't touch your funded account. I don't care how beautiful the price action is gonna be. This is called trap. One day it will be so good. It will give you so much. It will boost your energy. It will boost your hope. And then the next 5 holidays will be disaster. You will keep losing your funded account. So make sure that you're not falling into this trap. If you have some challenge account, you can try, or paper trade, go for that, but don't touch your funded account. Morning, Rajesh. Perfect, no trade today. Thank you, Jamie. Hi, Tito, and the chat. Hey, Marbra. How are you, brother? Waiting for something. You will learn. I will try to talk about waiting for something. Okay, how you will feel confident to go for a trade. That is really so important. How do I know that? How long I have to wait to go for a trade? This is something that will help you, or that will separate you from most of the traders. They're losing the money. How to wait for the perfect setup, because sometimes you see some sort of setup and you just go for that and you got stripped out. Then you really don't know when you should wait and when you should go for the trade. Okay, when you should take the decision. Do you want to go for the trade, or do you want to wait more? How do I know that I should wait over here? So if you look at this price action right now, okay, you can see that fall, this is just a leg. That fall start from here around this area. After clearing this high, trading this hourly bearish gap high over here, then market came here around 9:30. You are going to trade. So around 9:30, market has already moved a lot from here to here. So it has moved a lot without any sort of retracement. Like this market here went higher, a bit retracement, went higher, retracement, higher, then started to fall. Retracement, should keep falling, didn't fall. Instead of that, just changed the direction, go higher, cleared that high, fall without retracement, fall without retracement, fall, keep falling. Means if you would love to join over here to this price action exactly over here, it means you are going to chase the market. You are not letting the market to retrace before falling, or you're not you are going to enter into a market where the market is interested to switch its bias. It was bearish, now it's interested to switch its bias after clearing the liquidity. For example, this candle didn't clear this liquidity. That was a shallow run. You can see over here that was a perfectly shallow run that has so far has been cleared. So if it wouldn't go for that liquidity of the shallow run, maybe I would start to think about some sort of sell over here. As the liquidity has been cleared, market moved a lot without the retracement. Why you should enter over here right now? There is no need to do that. You have to look for the objective around this area. Does it really want to fall? Does it want to reverse now? For those buy side liquidity, what the market would love to do right now, have to find out that. And if you see, if it really would love to reverse, okay, which I'm not interested to say at all. I want to say it will keep falling for this area on my right hand side. But for example, it will just reverse. You will get that confirmation. You will wait for that reversal. If you are not sure about reversal, or you are not sure about this market is bullish, but you are sure, or your price action reading or price action knowledge, your expectation, everything, okay, analysis is telling that this market is going to fall, it will keep falling. You have to wait for the retracement, then you should take the sell. Without retracement, sometimes what happens, this market keep falling, keep falling, keep falling, keep falling, keep falling, and come here. So if it come here without any sort of retracement, come here, What does it mean? It means that you know now you should look for buy. So what happened? You actually missed that sell, but you are now aligned, or you are going to take the buy because this is the most logical level to you, right? So you missed that sell, but you are going to catch that buy. Maybe after coming here, market will keep falling, keep falling, keep falling. Maybe you will miss this trade as well, because it's not retracing. It's just falling like that way. Okay, it's falling, 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 falling. Like just red candle without any sort of retracement. It means you are going to wait for the next logical level to get at least the retracement leg from a certain level. If this is a falling market and you really would love to enter over here, first you have to wait for that retracement leg. Okay, then some sort of buy side liquidity to be cleared. Some gap should be respected. All of these things will tell you now it's time to think about a sell. At the same time, if it is start to reverse and you are not ready to see that reversal from here, okay, you are just thinking that it will keep falling. So you are not mentally prepared to take the buy. For example, you're going to lose that buy, but at the same time, from the next logical level, you will get your sell again. This is what you have to start right now. Entering into this market is called chasing the market. You are going to chase the market, and market is interested at least the retracement before falling. As I told, some days it's falling knife, and that is the trap. That specific day boost your expectation. Oh man, I can chase the market and still I'll be profitable. And one time it will just keep falling, rest 100 of the time it will just keep stopping you out. While whenever you are going to chase the market, you will see there is a retracement and you got stopped out. So it will keep falling, you will let this go. You have to mentally prepare that I'm not gonna chase the market, I am gonna let this go. This market has to give me my expectation fulfill at first, then I'll enter into the market. Otherwise, I'm just not going to take the trade. I'll let the fall go because I'm mentally prepared to take a buy over here. If I miss that sell, I don't care, I'll take that buy. Something like that. Or if you are interested to think that, okay, I'm not sure about the fall, but I'm sure about the buy. That means this market is going to reverse. And the first job is go to your higher time frame. In your higher time frame, look on your left, why you are expecting this market will reverse from here. Do you have any FVZ over here? Do you have any new day opening gap over here? Do you have any 50-minute hourly order block over? What do you have over there? Why you are thinking this market is going to reverse from there? Now you have FVZ over here, you have, or maybe order block, new day, new week opening up, whatever it is, you have something around that area. Okay, something. You're thinking that this market will start to reverse from there. Now your job to look for bullish setup. 22 IT model can be a good choice. After the big run, 22 IT model is the most secured model in my opinion, but still it's up to you whatever you'd love to go for. Or the order block can be the next beautiful things to look for that reversal if you're interested to see the buy. For example, I'm interested to see it will not going to reverse. Instead of that, it will keep falling at least for this gap. I want to see that. So as I'm not bullish, if there is a bullish setup, I'll let this go. But if I feel like, okay, there is some unfinished business that market has to finish at first, but market didn't finish it right now, this market is going to reverse from a logical level from my higher time frame. Even though I am bearish, I will try to catch that retracement leg, and wherever I'm expecting this market will go, I'm gonna close the trade before it reach to that area. This is two things you have to understand before pushing your button. You have to understand how to wait, and when to execute. Okay, it's not that hard. The only problem is train your brain not to chase the market. Train your brain to avoid the FOMO, fear of missing opportunity. There is nothing called missing. If I miss this sell, I will get that buy. But brother, market is not going to give you the buy at all. Okay, then I have I have taught you how to use the last FVZ to take the sell. So if I'm bearish, okay, I didn't find any sell over here. Nothing I found over here, and I am very upset because market is falling for this, but I was not able to enter over here. Go back and see where is your last FVZ. bullish FVG. Use it to take yourself for the next logical level. Just use it. So you have no excuse that you are rushing the market, you are chasing the market. There is no excuse, because even if you fail to enter here, I've taught you how to enter at the deep discounted area or deep premium area. Not 100% of the time, but 90-95% of the time you will see how beautifully that last FVG will work as an inverse way until your target, however, wherever is your target. So please don't rush. Don't think that you're missing something. You're not missing anything. Your mind is playing this game to you. Whoever is interested to go for the trade, please go for it. I'll just read the market. Will use this tool whenever I'll feel like from one level to another level. I'll keep using this tool. Look at this line. What do I have over there? Absolutely nothing. On my left hand side, absolutely I have nothing over here. So this market will reverse from there. I don't believe so. I don't think so. It should not reverse from a random level. It's a very perfectly random level to me. I don't want to see any sort of reversal from this area. Instead of that, I would love to see it will keep falling. Before falling, some sort of buy side liquidity should be cleared. Some sort of buy side liquidity has to be clear before this market to fall, as long as it's not reaching to this gap. This is the most logical level for me, I think. However, I think the sell is coming. I mean, not sell. I'm not interested to take any trade, but I hope that it will work. Okay, so this market came here. Now, let's see if it can give me a bullish FVG over here. What does this bullish FVG means? Nothing. This bullish FVG means nothing to me. I am just marking it because this is the first time this market gave me a bullish FVG, right? Buy side imbalance, sell side inefficiency. So, is this bullish FVG going to play a important role, or is it a gap that is like useless? I have no idea. I'm just gonna use this gap, or I'm gonna observe this gap. If I'm bullish, still this gap doesn't have any value to me. If I'm bearish, still this gap doesn't have any value to me. I'm just watching because market first time gave me a bullish FVG. I just marked that FVG to see, is this FVG is valuable for the market maker, or is this just a random FVG? So I will go through like this way, just marked it. Now watching, can it work by any means, at any means? Okay, like, is there any importance of this gap? Is the market respecting this gap? Why this gap appeared on the chart while this market is bearish, right? It's bearish, 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 cleared that sell side liquidity, and suddenly it has built a bullish FVG from random level. So why this gap is has been created over here? Is there any importance of this gap? Which gap in this market will have million of the million, right? RB told million gaps. Yeah, of course there is million gaps, but this is a very specific gap. Where is this gap appeared? This market is falling, 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 falling. First time gave me the bullish gap. This market is falling, 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 falling. Last bearish FVG. Just watching. like আচ্ছা, for the sake of this conversation, maybe there was another bearish FVG below this FVG. Then I would mark that last FVG. Right? Market is falling, 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 falling near or after clearing the sell side liquidity, or before clearing the sell side liquidity. The last FVG, where is that? So finally, it came to this last FVG. So market was falling, 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 falling. Look at this FVG. This is the last FVG, bearish FVG, right? Last bearish FVG. So can this market respect this gap, or is it's gonna go through this gap like there is nothing? How this gap is going to work over here? That is my interest right now to see. Like, does the market look at this gap the way I'm watching this gap, or it is a random level, like the market will see there is nothing? How the market is going to treat this gap, because that is the gap while this market is falling, last gap, last bearish gap, and the market didn't touch this gap before, right? So it's falling, there is no other gap. Look at this, there is no other gap. How this market is going to treat this gap? Does it have any value, or it's like another random gap? It went through that gap. It seems like that gap doesn't have any value. Okay, I'll still keep that gap over here to see later does this market react from that gap or not. And from hourly chart, you'll be able to see there is a wick that has cleared that low, or obvious liquidity has been cleared just by a week so far. Oh, brother, it's going higher. I'm missing this buy. Of course, I'm not missing anything over here. This market just keep falling. Now 1, 2, 3, 4, 5, 6, 7. Last 7 minutes just bull. Absolutely nothing over here. What I am missing? Nothing at all. However, if I, as I told you, if you ever get lost, look your last swing low. Did it create any liquidity, or did it trade any FVG from 1 minute chart? This will give you a huge understanding of this market. So here, this low has been created around 25 to 36.50. Go on your left and see if you have anything around 25 to 36. Okay, actually can't see that because I don't have the permission. Oh, if you have, then please try and check. Okay, this market went through this gap. Now it's working as an inverse gap, right? It tapped to this gap, respecting to this gap. So is it working? Is it going to work as an inversed gap, or is it going to be violated and gonna work as a retracement or reclaimed gap? How this gap is going to work? Not pushing the button, watching the market. For example, if this market doesn't respect at all this gap, which so far has been respected, like didn't work as a bearish gap, but it has started to work as an inverse gap. How far this market can go by using this gap or reversal or the inverse way, how far it can keep going higher? Not interested to enter over here because market left a lot of gaps over here, they're open. I'm not interested to use this gap as an inverse gap to take the buy or something like that. I'm keep watching how this gap is going to be important to me so that I can use this gap later to my using or later to take my entry. Okay, so you can see here market went through this, come back again, tap to this gap, working as an inverse way. So is this market bullish now, or is it actually going higher to trade this 15-minute bearish gap around here? See this bearish gap from 15-minute chart on my right hand side. Is it actually going higher to trade this bearish gap, and then it will close below this gap? Then I will use this gap as a reclaimed gap to take the sell. Can I use this gap like that way? Like it will go higher using this gap, trade this 15-minute bearish gap, come back at the same time, we'll take some sort of buy side liquidity from 1 minute chart, and then come back again closed below this gap to give me a selling opportunity over here for this low or for this last FVG from the 1 minute chart. How I can use this gap over here? So previously this gap and that gap doesn't have any value to me. Right now it is getting much more important to me, right? Because you can simply see that it's now respecting, right? It's respecting not this bullish FVG from 1 minute chart. It's respecting that bearish last FVG while this market was falling. There is no other bearish gap. Maybe there is some other gap. Let me check actually. No, not at all. But even though there could be some small gaps, I really don't look at them. But however, there is no other gap. So now it's working as an inverse way. How far it is going, brother? I'm going to miss this trade. As I told you, I'm not bearish, sorry, bullish. If I were bullish, then I could use this gap, maybe not sure, maybe that gap to take the buy. As I'm not bullish, I'm not taking any trade, and of course I should not go for the bullish entry from this gap. Absolutely dilemma, so you should not do that. But however, we'll see. Even if I were bullish, maybe I wouldn't be able to use this gap so far. Market fall, and then it started to reverse. How long it is going to go higher? Is it going to fall again? What is going to happen? I have no idea. I am waiting. That fall, I had no opportunity to enter. That buy, I had no opportunity to take the entry. But you could take the entry over here. Of course, you can't do that. It's absolutely random. Like, it's not going to happen. You observe these things, and then you will understand what I mean to say. It means it tap here, and now it is going higher for that buy side liquidity over here. I don't see this happen again and again. So I'm not interested to use this gap to take that short of buy or anything over here. All of these candles, there is just one bear candle, one or maybe two bear candle, and the rest of the candles are the bull candles. It's extremely shit price action. Tap to the low of this hourly gap over here. We'll see. And remember this gap, don't forget about that gap. Where this gap I got from here. While this market went higher, this was the last bullish gap. Respected so beautifully, failed to clear that high over here, then went through this gap, come back again, a bit respect over here, went higher, cleared this high, failed to take that extreme high, that I left that last bullish gap. See here, last bearish gap. While this market was bearish, right? Look, it is bearish. This is that last bearish gap. When this market is bullish, this is the last bullish gap. So how this market is going to respect this bullish gap right now, as long as this high is not cleared. For example, here, this gap, can I reuse this gap as long as this low is not going to be cleared? Okay. So this is that same sort of gap. How a gap is going to be important. This is how I'm going to use that gap. When this market is bullish, last bullish gap. Now, if you're confused, rather there is a small gap over here. Now I don't like to mark them, but what you can do, you can just add this type of a small gap. If you see, just add it with your main gap. Okay, just add that small area, then maybe you will get the confusion will be gone from your mind. However, so this is that gap. Market came back again, this old bearish gap from hourly chart. So 1 minute chart, it seems like extremely bullish. Let's see what is happening in hourly chart. In hourly chart, you'll be able to see that this gap is still holding the market, right? Look at this gap, hourly gap. Market open, fall. This is the last gap, bearish gap, last bearish gap. The same gap I have marked around here, last bearish gap while the market was bearish. This is that same gap that is still holding the market. It's my time to think about a sell right now. If it can provide me any any sort of sell from this 1 minute last FVG. See this gap, that candle low, that candle high. This is the 1 minute last FVG. So this market came back again inside this 1 minute last FVG. Can it give me any sort of selling opportunity right now from here? As an hindsight, I will do that, but I'm just saying what I would expect from here. I would love to expect some sort of selling opportunity from here. Just not going to frame the trade, that's all. Okay. I will just keep reading the market. If I am not interested to trade, what I do, I actually do this type of things. Mark the gap, start to observe that gap. Mark a gap, start to observe that gap. How can I use this gap? At the same time, why, how this market is going to react in that specific area, while this market should react. Okay, something like that. How it's gonna be react over there. So some of you are seeing this is a bull candle. I'm seeing that this is just a trap. Market is going to fall again. Let me see on my left hand side if I have something from 15-minute chart. Cool. This is a swing low coming on my right hand side. What do you see over here from 15-minute chart? Okay, that is a swing low. That is a swing low. There is two swing low, which is all together like has built a beautiful sell side liquidity, right? Relatively equal lows. So people who are going to believe this is a support, they're going to enter over here to take the buy, and then they see that this market is bullish. For example, if it was a normal day, it's not a normal day, so it's a holiday. I'm not saying this is happening, but if it was a normal day, I would say this is a beautiful support. Every people are entering over here because this is bullish now. This is a good support, and this market is going to fall again for this sell side liquidity. Before falling, maybe it will clear this relatively equal highs, will trade this bearish gap from 15-minute chart, and then it will start to fall again. So here I will come back again in 1-minute chart, and I'll observe this area. At the same time, I'll mark this bearish gap from 15-minute chart over here, that 15-minute bearish gap. I'm observing this last FVG as well as this old FVG. It means I was looking for sell, and now I'm seeing this is extremely bullish. As I was bearish, I didn't enter over here. Maybe there are some bullish opportunity. Okay, market structure shift, fair value gap, or order blocks. A lot of good things was over there, but I didn't enter because I was looking for sell just for the sake of this conversation. I didn't enter over here, but now I'm seeing this market is going to go for that buy side liquidity, right? Over here, this high and that high, they are the relatively equal highs. What I will do, I will, first of all, this is the last FVG. I have already shown you 10,006 times how to use the last FVG to take the entry. Now I'm not going to use this last FVG right now. I'm gonna use this gap, which is over here, to show you how to use this old gap while this market was bullish. Remember, this is the extreme high. Okay, this high is never been taken. For example, that fall, this low is never been taken. So this last FVG while this market is bearish, this last FVG while the market is bullish. It will close above this gap, tap again, will build a order block, will take the buy from there, and will hold it for this 15-minute last FVG. Again, I'm just showing you this one, that gap, while this gap is going to be broken, the last FVG. If any of you like with me for at least 1 month, you guys already know how to use this last FVG. I'm just not talking about this last FVG from 1-minute chart. I'm just trying to show you how to use this gap. Okay, gonna keep it over here. Gonna move this hourly gap from my 1-minute chart. Keep this to gap. So it will close above this gap. It doesn't mean that I'm gonna take the entry from this gap. I need to wait for either some sort of sell side liquid to be cleared, or bullish order block to take any sort of buy from this gap. So this gap, can it hold it? Send it. At the same time, just remember this is the last FVG from 1 minute chart. I'm just not going to talk about this, okay? You know how to use this gap. I'm more interested to see how I can use this gap over here. I need a down close candle that's gonna trade this gap. I'm gonna take like I will observe the down close candle. I'm not observing it. That's the confirmation. I'm gonna keep observe that last FVG. You know what you are waiting for. Please don't take any trade today. It's a day to just observe the market. It's not for taking any trades. So this gap doesn't build any sort of order block yet. This gap doesn't build it. So not, I have no idea take any trade from this gap right now as it didn't build any order block yet. If it build the order block, then and only then I can use this old gap, take my buy or sell whatever it is. Okay. Right now, I'm just observing what this market is going to do around this area. This old hourly gap is still holding the market. Let me show you one more time. If you go to the hourly chart, you'll be able to see this is that hourly gap. As long as this market is below this hourly gap, no buy is valid. We'll only go for the buy if and only if this gap is broken. Okay, the hourly candle closed above this gap, then you are good to go to take the buy. More importantly, this 50-minute last FBC is broken, then you can start to look for the buy. Otherwise, no buy is valid. So in my word, I will be back again to my expectation. So what I was looking for, sell. I've seen that this market came so far over here. This last FVC is holding the market around this area. It started to respect this gap, right? It closed below this gap. The next candle open, trade this gap. I'm interested to take the sell over here. This old gap as a reclaimed way. I'm more interested to take the sell over here while this candle closed around here. This candle has closed below this gap. I'm just going to remove this 1 minute gap, otherwise it's going to be so much complicated. Like here, this old gap has been closed below this area. After breaking this gap, violating this gap, next candle open, trade this gap, interested to take entry over here, going to cover the high of this gap, will look for the last FVG as my target, which is here around this area. This is too far, so I don't need that. Instead of that, what I'm going to do, I'm gonna mark the low and the high. The equilibrium is a good area to target over here, the equilibrium. Again, I'm not taking any trade over here. I'm just saying what I would do over here if I would love to work with my expectation. While this market was bullish, some of you started think this is a bullish market, and I was also interested to see if it can go higher and take this buy side liquidity, trade this gap before falling. While this gap has been violated here one time, then closed below this gap, next candle open, I'm entering in this market, at least the equilibrium. At the same time, we'll go for a partial around 1:1, which is 20 handles, something like that. We'll see if it can come to this gap, which is the measuring gap. In other words, this is the range liquidity 50%, because you have both buy side liquidity and the sell side liquidity, right? So I will see if it can fall for this gap and then decide where this market really would love to go. Is it interested to go for this buy side liquidity at first, or does it want to fall for this sell side liquidity at first? That is gonna be my expectation over here. So this candle closed, tap here. I'm gonna go for the sell around this area. We'll try to take the partial around 20 handle, wherever the 20 handle is. I think this is the good area to take the partial around here, around here. Try to take the partial over here, and then we'll try to hold the trade for this gap. This is how I give the priority in a very specific gap, because in this market, as you know, like million of the billion of the gaps. So how I can use a specific gap again and again? How many times, or sorry, how I can use a gap in a specific way? Please don't take any trade to your funded account today. We're just reading the market, nothing else. Bro, are you crazy? Because this market is extremely bullish and you are talking about sell here. Shit, man, it will go higher and it will take your profit. Sorry, your stop loss. Okay, the theme is why this market will go higher and clear this buy side liquidity. That is your first question. That should be your first question. Even if it would love to go higher and clear that buy side liquidity, should it go like this way? Like the way it is going, right? Boom, 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 boom. And then just a bit retracement, take that buy side liquidity. Should it do that like that way? Or should it do some sort of fall to believe those people that this is a very strong resistance? Then it will fall, clear some swing low, and then it will start to go higher. Which one is logical to you? Ask this question to you. Should it go like this way and just a bit retracement keep going higher? Should it fall, build some swing low, go higher, take that swing low, fall a certain level, then it will start to go higher? Which one is logical to you? Ask yourself this question. What did you see most of the time in this market? What do you see most of the time? For the sake of this conversation, maybe I didn't enter over here. Okay, instead of that, I was needed the confirmation. Then I would see these two bull candle to to be a valid bearish order block, or maybe another candle that is going to be an up close body close candle, good candle, to mark it as a bearish order block to enter into the market. If I'm not confident here to push the button, some sort of area, okay, not here, this type of, not this type of. Sometimes what happens, I get confused, is it really going to fall? And in that type of scenario, I really wait for the order block to get the confirmation. But here I just don't need to wait for the confirmation, because it seems like this is a bullish market. Every single one of the people are taking the buy. They are in the buy run. They are in the buy run. And when they're seeing this, they're entering more. They're taking more entries because the resistance is over here. That is the resistance. So they're pretty much confident this market is going to go higher to clear this resistance zone, and then maybe it will fall, or maybe it will fall for the support zone, whatever it is. So they will enter over here. Anytime they will see this type of short, they will enter. At the same time, these peoples who are taking the sell, who took the sell previously here, because they marked a zone around this area, they enter over here. They are going to believe that this is a bearish market. Remember, some people are in buy run, some people took sell at first, they're adding more over there, or some new people are joining here, they missed the entry over here, they're going to join here, and then when this market is falling, they're going to chase the market. I missed the entry over here. Okay, I was not confident to take entry over here to take the sell, because it was a very beautiful sell resistance zone, but still I was confused. I didn't take the sell. So when this market is falling, they are entering. They are entering. It went higher. They are entering. Sell, 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 sell. This market is going to fall a short period of time. Then there is a possibility this market will go higher for this buy side liquidity. It all is going to be decided by this gap, which is the around the 50% in between your buy side and the sell side liquidity. So for example, I didn't enter over here. I would enter from that up close body close candle. So this candle, the next candle, you see this candle closed below this candle, then this candle tap to this gap candle. I'm gonna enter over here from that order block, from this up close body close candle, going to enter over here, going to put my stop loss maybe above the constant crossment of this gap, going to target same 1:1 partial, and going to target over here. It's not a like a rocket science. It's a very normal logic to understand this market. While this is bullish, 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 extremely bullish, why you are entering over here? Because there is no retracement. It's a very simple logic. There is no retracement. So while this market fall a bit, it can't be the retracement, right? At least the equilibrium or this gap is more important. For example, there are some retracement, then market went higher, some retracement, then went higher. Okay, I don't need to worry about the retracement anymore, because the market has given me the retracement already. Okay, so for example, here came there, again came here, then here, take the buy side liquidity. Absolutely acceptable. But did it give me any sort of retracement? No. So this is a one-sided, one leg, just a leg. This can't be the retracement. This run is having the people, believing those people that this market is bullish, still bullish, they are going to fall into the trap over here. This is the trap for them. They are entering over here. They're taking the sell. At the same time, those people who took the sell here, they are going to enter to this retracement to take the sell, sell, sell. These both buyers and sellers should be into the trap. They should fall into the trap. Now, if I enter over here, for example, I entered over there, the 20 handle, I'm gonna take the partial over there, gonna put my stop loss to the break even, gonna let the market to fall maybe for this gap, maybe for this last gap, maybe for this sell side liquidity. I don't care, because I have already cleared a 20 handle partial, right? Is here 20 handle. I already took the partial, as my stop loss was 20 handle. I took the partial around 20 handle, put my stop loss to the break even, and then I'm gonna see what the market is reaching for. Is it reaching for this equilibrium or this gap, or is it reaching for this specific gap which is aligned with the upper quadrant level to this area in deep premium and gonna reverse from there to go for this buy side liquidity? What is going to happen? Whatever is going to happen, I'm safe because I took already some partial over here, right? I already took some partial. I don't need to worry about that anymore. I'll let this market either to fall or to keep going higher. If it really would love to keep going higher, then I will use this gap around here without any sort of confirmation. So here I was waiting for a confirmation. Now I don't need the confirmation anymore. Why? Because I was afraid of this. At the beginning, I was afraid of this. While this happened already happened. I don't need to worry about this gap to look for any sort of confirmation. Okay? Again, this is how I break the market in a very specific level, and I'll show you how to use this gap next time. If it come over here, I'll show you how to use this gap. Remember the fall, last gap, when it was going higher, the last gap, until the gap high is not gonna cleared. This is not again a rocket science. This is very simple. Just you have to feel the market, how the market is going to react over here. Now, I got the partial stop losses at the break even. That is going to be my target. Brother, it didn't fall to my target. Do you really care about that? If it fall over here, I'm really happy because I got my boom. If it doesn't fall over here, got stopped me out. Maybe I trailed the stop loss and got stopped out by trailing the stop loss. It's still that is okay. You are profitable. All it means is your profit. Are you profitable? Yes, sir. Then what you are waiting for? Why you are so afraid? Just because you didn't get your boom? Then just target 20 handle. Take the partial 10 handle, target 20 handle. You will get your boom. Just remember that. I'm gonna remove this gap because I marked that gap just to make sure a partial. So that gap is not something I was expecting some sort of retracement from there. I was not looking for that. But here this gap is the real gap I should look for. How this gap is gonna be worked. This is a range 50% gap. So here this is your buy side liquidity. This is your sell side liquidity. This is the range 50% gap. Around the 50%, this is the gap. So how this gap is going to be respected. At the same time, you got your boom, 38 handle, you got the boom, be happy. You even don't care. I don't care about what is going to happen next. Should I care about that? No, I don't need to care about that. At the same time, what did I tell you? This market is going higher, 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 higher. Oh man, that is the run. You will be able to see to the comment box. Some people will write down, brother, I took the buy here and I got 100 handle. Okay, boom, boom, 100 handle. Now ask these peoples, those people who took this buy. I'm gonna tell you, brother, very simple way, very logical way, very easy way. They will keep losing, keep losing, keep losing. That's for sure. Because they took the buy just because they're just thinking this is going higher. They're seeing this is going higher. This is the trap. This will build a huge confidence, and this confidence will kill them again, again, and again. Today they're lucky. Next day they're not gonna be lucky. If you are a ICT trader, but if you are trading like support resistance, of course that is different matter because I'm not a support resistance trader. However, this run is a pure leg without any sort of confirmation, without any sort of retracement, without anything. This is just a leg, and they enter into this leg like thinking that okay, it's going higher. Please don't enter over here. This let this go. For example, I was looking for buy just for the sake of this conversation. I was looking for buy because the sell side liquidity has been cleared. Market didn't build the liquidity. Instead of that, it has taken the liquidity, created the gap, and I was looking for buy. Unfortunately, I missed that buy. Did I get the entry? Of course, I got the entry. So what did I miss? Nothing. I just missed nothing over here. I let this run go because I know I'm gonna get my run. I'm waiting for that run from a very specific gap, not some sort of like random gap, nothing. So what happened? It come to this measuring gap, or in other words, range 50% fair value gap over here. It came here, it's retracing from there. So those people who took the sell, now they started to pray, oh God, please, this time, please let him fall. I'm gonna close the trade again over here. So please let this market to go over there one more time. I'm gonna close that trade. And these people who took the sell, sorry, buy over here around this area, who took the buy, retrace leg, market went higher, put the stop loss below this retracement, they got stopped out. Buyers are not in this market. Sellers are has started to pray. Please, please, please let the market fall one more time. These buyers already got out. Sellers started to pray. We are going to enter over here. How I can enter over here, brother? I just need the confirmation. This gap is broken. I'm gonna take the buy here, gonna put my stop loss in a logical level. I'll look for that later. Gonna target first this buy side liquidity as a partial 50-minute last FVG as a target. So I don't need to worry about anything over here. What happened over there? I'm just waiting. For example, I was looking for buy only, no sell. Okay, I'm not interested to take any sell. So what I will do, I missed this buy. I don't care about that. I was waiting for a confirmation. I didn't get the confirmation. Market fall. I don't care. I don't care. Finally, I found it has traded the equilibrium, the 50% range 50%. In other words, those people who are with me in the premium and discount, this is that leg, trade the equilibrium after clearing the low. Remember, all the lows has been cleared. Mark the leg around this area, this high and that low. This is that area. Market came, where did it came? The premium area. Then mark this new leg, mark the equilibrium, trade the equilibrium where it is reaching for now, buy side liquidity. This is obvious. How I can enter? Just need a confirmation while the market is going to close above this area. So after getting this, boom, if I were looking for buy, for example, I'm not interested to look for sell, I'm interested to look for buy. Either I will try to enter over here, which is highly risky. Nobody knows is this market going to stop over here or not. Just wait for the bearish period to be broken, which is this gap here, or the last FVG that has been broken here as a shallow run, or the fake breakout. You can wait for anything you want, and you are going to enter from there until this 50-minute last FVG by clearing some partial around this area above the liquidity level. From 15-minute chart, this is the 50-minute bullish FVG around this area. Market tap to this bullish FVG. Now can it go through this? Come to this 50-minute last FVG. All I need to do is this gap. So here one more thing is history repeats. So this is a history. You saw without any retracement, market went too far, then fall again. I want to see this same leg over here, that leg one more time over here, the same leg one more time around this area. History should be repeated. I'm gonna remove this right now because I need to wait to see how this is going to work. Okay. By the way, guys, are you getting the point? What I mean to say, how one gap is gonna be important, how you are going to see this market while this opened. I had no idea which gap I could use, which gap I should not use. I had no idea, right? And then I saw the market, which gap is being respected. Can I use that gap again? Okay, if I can't use that gap, then what else I can use over here? What should I look for around that area? What is the best case of scenario around this area? Go for a trade. Which gap should be respected later? I didn't know anything. I just marked them, and then I find out that this is the area I can use to to enter. How long? In a very specific area I can enter here. Should close the trade here. We'll wait for the buying opportunity. Buy side liquidity is cleared. We'll start to look for sell again. for this sell side liquidity after clearing all the buy side liquidity. Now from here I'll start to look for sell. If it would love to go a bit higher, which is new week opening gap, I think it's been marked over here on my chart. Okay, actually it's here. Too far. I will talk about that later because it's a low probable area. You can see all the new week opening gap, new week opening gap, old week opening gap. So I have two over here. I have to be very careful around that area to frame any trade. Disaster area, okay? So can I enter over here around this area? Can I enter over here? Can I enter over here around this area? Of course you can do that. Why is that? Because this market fall, trade the measuring gap, swing high has been shifted. You see this market structure shift around this area, around here, market structure shift, entry FVG, last FVG, oh sorry, last FVG, entry FVG over here. See this gap over here, entry FVG, last FVG, interested to enter over here. If I don't want, if I'm on one side, okay, now I'm pretty much confident this buy side liquidity is going to be cleared. I'm not waiting for this gap to be closed. I'm not interested to wait for that. Instead of that, I'm going to enter to this entry FVG by covering the last FVG by covering that. Gonna enter over here, target is this area. If I need the confirmation, that means I'm not sure yet, is it going to go higher or is it going to fall, then I'm not going to take this trade. Instead of that, I will wait for this gap to be broken or the last FVG one more time to be broken, enter into this market for this leg. If I'm seeing that the buy side liquidity is very near to this last FVG. Sometimes I take the risk to take the entry from this area if I find the 22 YT model. Only 22 YT model let me enter into the market without breaking the bearish PDRA, this one or the last FVG. Only the 22 YT model let me enter. Otherwise, I always wait for the bearish PDRA to be broken at first to enter into the market. For example, in this case of scenario, beautiful 22 YT model don't need to wait for this gap to be broken, as well as the liquidity level, which is here. You can see around this line is the liquidity is very near to this gap. So I really don't want to enter into a market where the market the liquidity is very near to the market, and I enter over here. I have to take the partial over here, which is less than 20 handle. Okay, so something like this, less than 20 handle. How much is that? 14 handle, 15 handle, something. I really don't want to wait for this gap to be broken. Instead of that, if I found the 22 YT model, liquidity is very near, I have the 50-minute or higher time frame point of interest, I love to enter over here. Love to see the lowest down close candle as an order blocker, though I don't have that yet. But however, like, this is gonna take that buy sell liquidity coming here. So first I was waiting for sell. I was waiting to take sell. Came to the deep premium, already switched to my bias, think that this buy sell liquidity is on the queue. When I found this buy sell liquidity is on the queue, I need to catch that retracement. If I want to catch it, the retracement, I can catch the retracement over here. If I don't want to catch the retracement, as I'm already got the bullishness, or I have already found that market is interested to go for that buy side liquidity, depending on that premium and discount, I just let this fall go. I will enter here to the entry gap, not this gap, not that gap, entry gap. I'll enter over here, hold the trade for liquidity and this 15-minute gap. If I don't get the entry opportunity over here, by anyhow, by any chance, I didn't get the entry over here, I will wait for the candle to close above the last FVG, or if I use this gap, whatever it is, this time I don't need the confirmation. Like previous time, I needed the confirmation because this could happen. This time I don't need to worry about that. Instead of that, I can simply use this gap to take my entry. Okay, so body will close one tick above this gap. We'll try to take the entry over here. I have to cover the order block. Unfortunately, the order block is too far, so maybe I won't be able to cover that order block. We'll see. First, let the market to close above this gap. But the best is to take entry from this 22 YT model. Please keep listening, okay? This is a good chance for all of us to understand the market PDRS, or most important thing is uh, FVZ. How to use an FVZ? This is a $1 million question. How can I use an FVZ? There is million of the FVZ. Which FVZ is gonna be important? How do I know that this FVZ is going to be very important? Like when I can use that FVZ, when I can wait for the confirmation, when I should not wait for the confirmation, because if I wait for the confirmation, there is much more possibility I'll miss the trade. This is like step by step. Everything is like one step to another. Okay, like you will come here, then you will go there, then you will go here, then you will go there, like one by another, one after another, one after another. This is something like that. It's not a rocket science, guys. Trust me. Don't make it complicated. That is the only request. This is not the order block, so some of you can use this as an order block, can think that this is an order block. It's not an order block. Or change in a state of delivery, it's not that order block. There's much more possibility that's going to be violated, or this law is going to be violated to take some sort of liquidity one more time before going higher. Okay, so it has cleared that low over here. Now it can start to go higher without any sort of waiting. Okay, now like keep going higher, something like that. This low is the liquidity has been cleared. Trade this entry gap one more time. Let me actually mark this gap. I'm gonna mark this entry and the last gap all together over here. Has been traded. Should keep going higher now. Now this reversal from here, the retracement from where it happened. Where did it happen? Last FVZ, that candle low, that candle high. This is the last FVZ to that specific fall. Market came to this last FVZ around here, and then it started to reverse, or is not reverse actually. It started to fall or reacting from this last FVZ around here, right? Not random. Every gap you don't need to mark to take an entry. Some gap you will mark to identify why this sudden retracement happened from this specific area. What do I have over there? Look on your left. You'll 90% of the time you'll be able to see the FVZ. Okay, FVZ, last FVZ, 90% of the time. So this is the lowest down close body close candle. If the candle can close above this candle, this is gonna be the order block. Hey guys, please don't forget to push the like button, subscribe to our channel if you are new. How many likes did I get, by the way? Okay, 150 people are watching, 67 likes. Can you guys please push the like button? Please make it 100 likes. I just need 33 likes to make it 100. This is for my observation. Please don't focus over here. This is just for my observation. It's not an entry. It's not nothing for you. This is my observation. Please don't copy anything. It's a request to all of you. What is that? I'm not gonna explain anything about this. Just don't push the button. It's a request to all of you. I want to show you something one more time, that is from hourly chart. Look at the candles while this last gap is holding the market. As I told, I'm not bullish as long as this market is not going to close above this gap. This is something that will help you not to switch the bias immediately. For example, I was looking for sell for here around this area. So I'm not interested to switch my bias as long as this market is not falling for this gap. I'm not going to switch my bias, or the market is not going to close above this hourly gap. Above this hourly gap, I'm not going to switch my bias to bullish instead of bearish. Okay. So if you really are a beginner, don't avoid these rules. This one rule will help you not to tilt. Okay. So sometimes you will tilting. You will take sell, you will take buy. Don't do that. Okay, I'm just going to remove it because I'll keep it by myself. I'll keep watching that by myself. I don't need to. Others people will get confused why I have marked that and why I'm framing a trade over there. I'm just not interested to explain that. That's for my observation. That was for my observation. I'll be back to my real explanation of the real price action, the way we are explaining. So right now I'm watching, can this market build this candle as a bullish order block? Entry possibility either from this entry gap or from this order block, or while this market is going to close above this gap, buy side liquidity, 15-minute last FBZ. I'm not interested to look for any sort of sell as long as this liquidity is not going to be cleared. After clearing this liquidity, I don't care about anything. I mean, I really don't care about that liquidity. I care about this 15-minute last FBZ. Without tapping to this last FBZ, it should not fall. Right now I'm watching this. I'll only think about a sell if this gap is broken. Then I will start to look for a sell because this is the range liquidity 50% gap. If it is broken, then I will start to look for a sell from here to this last FBZ to 1 minute chart. In the meantime, I'll show you how to use this gap that you are seeing right now here. This gap and that gap, they're the same. This is a bullish gap, that is a bearish gap. That is just a difference here, bullish and bearish. This gap I can use to take sell. This gap I can use to take buy. I can use anything. Same here, this gap. I just need uh, the confirmation, the sign it is gonna be used or it's gonna be very important for me. Did I get 100 likes? Oh man, my chat is off. I didn't notice that. Okay, I got actually 85 likes when I asked for the likes. 14 people already left. You don't wanna give me the likes? Okay, then you can simply leave the live, no problem. Let me open the chat actually. When did it closed? I didn't notice actually. I was just reading the market. I was not seeing the just okay, thank you. Ibomik, good morning, brother. Good morning. How are you? Uchuk, it's just above 50%. Just above 50. Okay, it's 50. see how we broke this market, like how it is going to work. We just broke it, like we just outlined that nothing was hindsight over here. We have waited for the confirmation, we have waited for the PDRA, we have waited for the scenario to use some specific thing, and then we break this small fraction of the price. Is it really so hard for you guys? I can see this is really so simple, very easy, very easy. Just you have to read the market step by step, that's all. I would love to see this candle to work as an order block now. Here, this gap is one of the best inversion fair value gap. I've already explained this depending on the PD array, premium discount array. Brother, I mentioned earlier the low of the day is after taking out a daily swing low and tapping into an old new day opening gap. There is no new day opening gap. I didn't see any new day opening gap. I think it's been removed from my chart, I guess. That a good reversal level. Please look at daily chart. Yeah, I have already talked about the Suzy one. You maybe you are a bit late. I have already talked about that, brother. That was the low I was watching to see if it. Oh, okay, that is the gap. Why it's not marking to my chart? I think it's more than 5 days. That's why it's not marking on my chart. However, that was the low that should be cleared, and market should not clear this low. Instead of that, I was seeing this 4 hour gap. This gap to be taken or to be traded at first before going higher. I didn't see there was a new day opening gap, unfortunately. If I saw that, maybe I would be able to catch some sort of buy. Unfortunately, I didn't notice that, brother. That new day opening gap. I was also bullish after clearing previous that swing low. While this that swing low has been cleared, I'm also bullish. But as this market, I didn't notice that new day opening gap. I was thinking this is the most logical level. This market will fall. Otherwise, maybe I would be able to catch. No, there's no way to catch that buy. However, only way to take the entry either from this order block or from this entry fair value gap, or while the market will close above this gap. That is the only way to take the entry. However, while the market will close above this gap, it's gonna be a very small range, very small range. That's why I'm saying that this is the best area to go for the 22 YT model. As you can see here, this is the market structure shift after clearing some sort of buy side, sorry, sell side liquidity here. Remember, some sort of sell side liquidity should be clear if this love to go higher. That was the sell side liquidity market cleared, trade the measuring gap or the 50% or the equilibrium or the of the premium and discount. Give me the market structure shift, entry fair value gap, immediate reaction. One, two, three. Within three candle, you will be able to enter over here from the entry gap. Stop loss is below the breakaway gap candle low or below the swing low, wherever you feel good. Entry from here, target is here. Sorry, that 50-minute last FBZ is the target, clearing some partial from this line. Follow one more time to build the order block, because previously I didn't have the order block. Now I have the order block here, lowest down close body close candle. This candle has validated the order block. Next candle tap to this order block. That's gonna be the area. If I don't take the entry from this gap, I have to take the entry from this order block by putting the stop loss to tick or to handle below this order block. Target is gonna be same this 50-minute last FBZ. Partial is gonna be around 1:1. Wherever it is gonna be, that's gonna be the partial over here. So like this. And the last opportunity is while the market will close above this gap, because I was talking about that gap. And the safe entry, the conservative entry, no aggressive, nothing. I will wait for the bearish PDRA to be broken, and then I will enter over here without any sort of confusion. We'll take a partial around here, hold the trade for this area. That is the safest entry. Susie Van, I can see that we actually think the same way. Thank you, brother. The things you just told me, I have explained that at the beginning of this stream, so you can recheck over there. I'm happy to see that we are seeing the market exactly the same way. This is one of the best inverse FVG. Should work as a best inverse FVG, but we'll see. I'm not good at inversion fair value gap. I will say at first, because my inversion fair value gap marking is very bad. Okay, it's always very bad. Those people who are with me for so long now, they knows that. I mean, they know that my inversion fair value marking is shit. But we'll see if it can work as an inverse gap or not. Got another payout from Take Profit Trader brother, posted in Discord. Congratulations, brother. I'll check that. Uh, Thank you for bringing that topics over here. Funding ticks has actually closed. They have closed funding ticks. Those people who has the account, okay, with funding ticks, don't worry. They will give you back the money you have spent to buy that account. They're going to give it back if you have fulfilled the requirement. That means you are eligible for your payout, then they will give you back the payout as well, 90-10 split. So I hope everyone will be cool. This is the harsh truth of the prop firm. Which prop firm is gonna be like closed when? Nobody knows that. That is why it's always best to go to cash out the money as soon as possible from the prop firm. Don't try to build the account with the prop firm. All I mean to say, for example, you have an account with Top Step, okay, and okay, take Profit Trader. That's gonna be a good idea. Take Profit Trader, and you wanna make a buffer 50,000. So you are not withdrawing the money, withdrawn the money. Instead of that, you are actually building your buffer zone. Don't do that. When these prop firms are gonna be disappear, nobody knows that. They come here for a certain period of time to make some business, and when the business is done, they're going to close it. They're going to open another prop firm with another name, new name, or something like that. So all I want to say, make some money, request that money, payout, take the payout. If you want me to say which one is the best prop firm, I will go with the Take Profit Trader. That is the best prop firm ever. So if you are working with prop firm, I will always suggest you guys to go with the Take Profit Trader. There has no rules. Simply they have no rules. Make the buffer. Above the buffer, whatever you will make, you will request the payout. If you can make 300 $400 every day, you will request that 300 $400 every day. You don't need to wait for 5 trading days. You don't need to wait for like uh, certain amount of the money to build before requesting the payout. No, nothing. Buffer, request payout. So I will say this is the best opportunity. This is the best case of scenario to go with the Take Profit Trader. And they have no activation fees, by the way. Daily payout. You will be addicted. In short, you will be addicted. Get the money back. Almost every time you will be addicted to request the payout. You work with the Take Profit Trader. Just make sure you have used the code T2 wizard if you want. I really appreciate it. So this is the time this market will keep going higher with speed now, because market has traded the order block. Now this market should build a gap, a bullish FVG that will be unfilled. That means market is gonna make an unfilled gap, and then it should keep going higher with rush. It should be in rush toward that liquidity. Wherever the liquidity is, it should go toward that liquidity in rush. And this rushing things is gonna be proven by the break, wanna say unfilled gap. So if there is a gap, bullish gap, market fail to fill that gap 100%, that is the sign market is extremely bullish. Yes, take profit trader is the best for me. As soon as I have some profit over the buffer, I withdraw to my wallet and then to my bank account as up. I don't trust these prop firms. Look at funding ticks. Absolutely, brother. That's my point. Just don't believe in them. Request the money. As soon as possible, request the money. And in this type of scenario, take profit trader is always the best. It's always the best. Yes, I had two funded accounts with them. Never thought they will close. Anything can happen anytime with any prop firm. So you're seeing that like take profit trader is highly trusted because you trust pilot or everything else, and they are doing good business. Anytime they can be closed. Anytime top step can be closed. My funded futures can be closed. FTMO can be closed. So don't, you should not trust this prop firm. Instead of that, whenever you will get an opportunity, request the money. It's done. Simple. Just request the money. Closed below mean threshold of the order block because of the time. Look at the time, sister. First you have to give the highest priority to your time. This market is trying to move in a certain level, but it's waiting for the time. Top of the hour, middle of the hour is the time where the market most of the time give the speed. Okay, toward your direction, it gives you the speed, like to the top of the hour, middle of the hour. So even though it has violated that order block a bit, like one candle has closed below the mean threshold of the order block, the next candle has closed above the mean threshold of that order block, is still acceptable. Sometimes fake breakout happens with the order block. I'm gonna remove this inverse gap, to be honest, because it absolutely violated. Uh, so sometimes it's gonna do or time distortion happen before the middle of the hour, before the top of the hour. That's why we have to put the stop loss like far away from the order block low, like from the opening or to the order block high or the opening. Not only the low, plus to handle or to tick depending on the volatility. If it is an highly volatility, then you have to move, make sure that you have covered at least two three handles, something like that. If it is not highly volatility, then you can just simply put it two tick or three tick below of this order block. If you get stopped out just because of your tight stop loss, you will wait for this candle to close above this order block one more time to take re-entry. Yeah, otherwise if you're safe, like your stop loss is safe over here, you don't need to worry about the re-entry. You will just going to believe. And this time distortion has been explained by the time, as according to ICT, first time then price. So when you are going to expect the speed, to the top of the hour, to the middle of the hour. Now ICT talked about the macro only, where 9:50, 10, 10, 10, 50, 11, 10. I added the middle of the hour because I have seen a lot of time market give me the speed around the middle of the hour. So always I try to enter either very near to the middle of the hour or very near to the top of the hour. So if I can enter in between 50 to 10, then I try to enter over here. If I miss that trade, then I tried to take re-entry around at the middle of the hour. So for example, here you see this candle tap here. This was the middle of the hour. That's why I'm saying that entry here is the best entry according to that 22 IT model. That middle of the hour, I'll enter over here. Stop loss is gonna be below this breakaway gap candle low, or maybe below this candle over here, and then hold the trade here by expecting at the middle of the hour will give me the speed. It didn't give me that. Come back again. Now this is the time where the market should give me the speed toward the liquidity, wherever the liquidity is, with speed. See this gap over here, around this gap. I want to see this is going to be unfilled. What is the importance of this gap? The importance of this gap is, if it market failed to close this gap 100%, it means it is in rush. Clear the liquidity. Market is in rush. If it closed this gap 100%, or like market didn't leave a simple portion open of this gap by the body or the wick, it means market is not in rush to take that liquidity. Instead of that, it will spend much more time over here before going higher to clear that liquidity. In that type of scenario, if your stop loss is over here, maybe you will rush to move your stop loss very fast, because market can spend a lot time, or it can consolidate engineered sell side liquidity to clear that sell side liquidity, and then using breaker block it will go for this buy side liquidity. Depends on everything is gonna be decided by this gap. So if this gap is 100% filled, you have to think about your stop loss. Wherever the stop loss is, you have to start to think about that stop loss, because it's time to move your stop loss. If you see this gap is like unfilled, like some portion of this gap, even one tick of this gap is unfilled, it means your stop loss is safe, because it is unfilled. So of course you're not going to get stopped out. Slowly but definitely you are going to get your boom over here. It closed it 100%. If it closed it 100%, as you can see here, if it could close it 100%, I would start to look for the breaker block. As it didn't do that, still some portion of this gap is still open. I'm not interested to look for any sort of breaker block. Instead of that, I'll keep seeing if it can keep going higher. At the same time, while it will close out this gap, what did you remember? This is that specific gap where I'm more interested to take the buy while it will retest this gap. Here I needed the confirmation, that means order block. Here I don't need the confirmation. I just need to see the retest. Stop loss just below that candle swing low, or below that swing low. Target is this buy side liquidity, at least the partial, and target is this 50-minute last FVG. So after taking the partial, stop loss to the break even, will hold the trade for this buy side, I mean sorry, this 50-minute last FVG, to see if it can take it. If it doesn't take me over here, which can happen as well, like it doesn't retest it, and I didn't enter anywhere here, nowhere I took my entry, then I'm not able to chase the market anymore, means I missed the opportunity. I'm not able to enter into this market over here. Okay, so it all depends. If it reaches this gap before clearing this buy side liquidity, can it retest this gap? If it fail, no trade. If it retest, I'm lucky, I got the entry, at least partial will be cleared, and target, if it hits, I'm happy to see that. If it doesn't do that, I'm not, I won't be able to enter into this market over here. Are you getting the point, guys? From based out in US are trustworthy, I guess. I don't think so, because today, a few years ago, if you guys remember my fund, my forex fund, I guess that is the name, uh, that was based on US, Canada. That's been actually, that is the first one who closed. I mean, I don't know. So guys, today's I just didn't push any button because the liquidity has been cleared, so this entry is not valid anymore. However, I just failed to show you how to use this gap, take the buy. Unfortunately, it didn't give me the entry. If it could give me the entry, that could be the run from this gap, from this specific area. Okay, so it's not something like a rocket science, as I am saying. This is a pure reading price action. I just didn't do anything very specific or something like very, like critical. No, there is nothing very critical over here. Everything I have explained step by step from one level to another level, one level to another level. Just all you have to do is you have to understand this small fractal of the price action. It's not the market structure shift. So those people who are new, they will see that, oh, okay, market has came here, fall. This is the liquidity taken. Then market build a swing low, went one more time higher, cleared that high, traded that last FVG, market structure shift, FVG, tap to this FVG, market will keep falling. So they will see this is a bearish 22 IT model because market is in deep premium, right? Market is in deep premium. So what do we know? Take sell at the premium, take buy at the discount. So they will see this is a discount premium area to take the sell from this beautiful 22 bearish 22 YT model. But what actually they are missing is this range, this dealing range, right? This is the buy side liquidity. This is the low that has cleared all of the lows traded that new day opening gap. Unfortunately, I didn't notice there was a new day opening gap. Suzy one later told me that there was the new day opening gap, so I was actually bearish for this gap, as I didn't, it was random to me. But later I saw I have the new day opening gap over here. See this candle open, this candle close, this is the new day opening gap. So it's not a random reversal, it's a perfect reversal from the new day opening gap. Liquidity that has been built inside a new day opening gap, I really don't care about that. It's not that important to me. However, even though I noticed that, I won't be able to catch that run because this is a leg, like falling knife rising to the star. I'm not interested to enter into this market while this market is not giving me anything. This area, will this market fall? Where should it fall? Those people are members. They know perfectly where it should fall, right? Range, low that has cleared all the liquidity, high, the low, equilibrium should keep falling while it fall, maximum equilibrium, it should keep falling, clear that sell side liquidity. If it come to this premium area, means that start to look for buy for this buy side liquidity. So what you will do, you will move this from here to here around this area, this swing high. So how far this market can maximum fall? Best area to reverse from this upper quadrant level, then maximum fall should be happen until the equilibrium around here. However, when I explained the range gap 50%, some of you can see there is a small gap. As I told you, this is a very small gap. So if you really would love to mark this type of gap, I really don't have any problem. But I don't prefer to mark this type of gap. Instead of that, this type of gap is much more easier for me to understand this price action. So I always try to mark this type of gap. If you are confused, just add it. Okay, so something like that, add that gap with this specific gap, and then it will be easier for you. I'm just not going to do that. This for you. Okay, those people, if you get confused, the gap over here, small gap, why I didn't mark that gap, just because it's very small. And in a, if I keep it like this way, you won't be able to notice this gap as well. Like, it's very difficult to mark. This gap is much more cleaner to me, that's why I marked that gap. However, it came here, took the liquidity, give me the market structure shift. This is the market structure shift. Fall, came to the entry gap, go back again. This last FVG over here, I'm gonna remove this because I was not able to use this gap. Last FVG, I'm gonna show this to you. Not very difficult here. Very specific gap here, okay? I'm gonna keep it until there because it's been respected one more time. Last FVG. Took that high, trade that last FVG, sent the market lower. Why? Market didn't build the order block. Remember what did I say? This is not the order block. So some of you are seeing this is an order block. I'm not seeing this is an order block. I prefer to see this low to be taken one more time. Why? Market came last FVG, sent the market lower to clear this sell side liquidity or that low to trade this gap beautifully. More importantly, to build the order block. Build the order block here, tap here one more time or the highest up close body close candle as an order block, reaction happened, send the market until the 50% of this order block, retest this entry gap one more time, I mean the entry gap. After retesting this entry gap, closed one more time above this order block. So if I get stopped out here for that leg because I trailed the stop loss, I will re-enter over here, not going to retest. This candle close will add my entry over here. Target is there. This gap has been broken. Gonna bring this old last FBZ, because if this last FBZ is broken, this liquidity is obvious. That has been broken here, around here. I think it didn't retest. Yeah, it didn't also retest, and then came to this 50-minute last FBZ. In this market, if I would love to trade, first I would love to go for this sell around here, because it needs the retracement to build these people to think that this is a bearish market. So they will enter over here. I will enter with them. I will close my trade in a very specific area, maximum the equilibrium. Will try to take the partial around 1:1 or around this upper quadrant level. Hold my trade around the equilibrium or the FVZ around the equilibrium. Then we'll wait for the re-entry opportunity toward the buy side liquidity, because the range has told me here, this range has told me it came to the deep premium area. I'm gonna clear the buy side liquidity. Retracement until the equilibrium, market structure shift, fair value gap, retracing from this last FBZ to finish the unfinished business and make the order block, send the market here just by the small time distortion because of the top of the hour, which is 11 a.m. New York local time. Little time distortion, 11 a.m. New York local time. Retest, left that gap open. This gap, left that gap open. Look at the speed. Just look at the speed. So this gap is important to see this type of speed. If it open, you will see this speed. If it is not open, feel 100%, will start to move my stop loss as soon as possible, because I'm not believing this market anymore to clear that buy side liquidity before clearing some sort of sell side liquidity. So we'll start. If it left open, either very soon I'm gonna get that boom, or maybe I'll get some partial, will put my stop loss to the break even. So thank you so much, guys. If you really understand anything over here, unfortunately I was not able to show you this gap, how to use this one, but I hope you got this gap, which is the same gap over here, how I took the sell over here, and I was waiting for the buy, but unfortunately I didn't get the opportunity. As you can see over here, it just didn't give me the opportunity, unfortunately. Otherwise that could be a beautiful buying opportunity from there as well. Okay, so here the 50-minute last FVZ low is my last target. Now I'm preferring to see if it can keep falling for this sell side liquidity, or does it really would love to keep going higher. That's a different matter of scenario, different case over here. All of these things happened in front of you. Still, if you say that this market reading is very difficult, then what can I do? What else I can do for you? Just tell me, brother. You don't need to learn these things. You don't need it. But if you have the time, then you can observe this type of gap. Market bullish, the last bullish gap. Market bearish, the last bearish gap. Now, in other words, it is called the first fair value gap. Okay, I really didn't want to explain this, but I just don't know why I'm explaining this to you today. Maybe it's holiday today, that's why I'm just talking about that. But it is called the first fair value gap. This is the most confusing things I have ever learned by myself. So, but still, if you, some of you can think that maybe it's easier for you, just because of that I explained that. Awesome, we have got 102 likes. Thank you so much, guys. Thank you, FL Trader, for letting me know. And thank you, Sophia, for writing boom. Hey, Boros, how are you, brother? It's been a decade. I don't see your name, ma'am. How are you? Hey, Jeffrey. Yes, okay. I think you are giving some reply, but I really don't remember what did I ask. If I ask something, by the way. No, brother, it's too easy. Absolutely. Just let the FOMO go from your mind. There is nothing called FOMO. Fear of missing opportunity. I'm not fear of missing any opportunity. I will be entering to this market again and again. Sometimes it's gonna be a losing trade, but most of the time you're seeing, right? Some days are bad, really bad. I agree with you, brother. Every PDR doesn't work. Like, I'm watching this PDRs, but it's not respecting. It's not my fault that days are wrong, that days are bad. And on those days, you will survive by just taking two losses. Stop over there. Most of the days, these PDRs are gonna be respected so beautifully. In this small fractal of this price action, how many gaps I have marked over here? How many gaps gotta be important? Okay, in time, how the gaps are getting importance. Okay, they're getting the importance. Just look at that. It's not hard, brother. You have to just focus. That's all. Thank you, Chuk. Even though it's a bank holiday, price action has been beautiful today. Absolutely. I agree with you. No trade today. Tomorrow will be beautiful. I don't think so. Tomorrow's morning session is gonna be beautiful. It's gonna be disaster. I hope so. Tomorrow's PM session is gonna be so beautiful. I think I think Jamie. Tomorrow's PM session is gonna be beautiful. However, guys, do you have any question? If you have any question, let me know. Otherwise, I think I can close the stream for today. Again, guys, Take Profit Trader is really awesome. I have a lot other prof from like Lucid Trading, then like Trade Day, Blue Guardian Futures, Bull Knox. But my funded futures, I stopped working with them because they have a lot of confusion. I stopped working with them. That's why if any of you are still using, because I'm getting small commission on funding. I mean my forex fund. What is it? My funded futures. Please don't use my code. Okay. Please don't use my code with my funded futures. Just use someone else's code. I don't like that platform anymore. I have stopped promoting them. However, Take Profit Trader is something I always force you guys to go with that Take Profit Trader. Not because of me, because of you, because Take Profit Trader is the only platform that is realistic. Okay, it in short that is trader friendly. It's friendly with you. They have no rules. Simply no rules means no rules. No hidden rules, no open rules. They have no rules. While you have the funded account, there is no rules. Wait until the buffer, request the payout after the buffer. If you take two losses, stop over there. Try to make five funded account with Take Profit Trader. If you have five funded account with Take Profit Trader, almost every single day, almost every single day, there will be money in your bank account. Almost every single day, you will get money on your in your bank account. If you have five funded account with Take Profit Trader, just make sure on those days where it's bad, you stopped after taking two losses. In one session, maybe you took two losses at the beginning, 9:30. You are going to switch your next funded account. Then you took two losses, the next account, you're going to switch to the next account. Like, in one session, you have five funded account, you will have 10 opportunities. So at least one account will give you one winning trade, and that is going to be your payout. That's going to be your payout. So just you will trade, you will make the payout. If you have one funded account, hold on, hold on. It doesn't need to be funded account from Take Profit Trader. If you have more funded account from different platform, that is also cool. But if you have five funded account with Take Profit Trader, similar to Trade Day are also similar, but Take Profit is always the best. However, if you can do that, five funded account with Take Profit Trader, almost every single day, you will get some money in your bank account. Almost every day. Simple. One day is good, you are going to make a ton sheet of money. No, Sophia, I will be here around the AM session, but PM session, I'm just not sure, sister. I'm taking a lot of photos. That's all I'm doing. So after closing this stream, I'll just go for taking some photo. That's all, brother. I really would love to share, like two photos, okay, with you guys. So I really don't know you guys like it or not. I really love to like it. I mean, take photos. I should copy trade. Now, how to beat intraday trailing It's until the buffer, brother. So after $2,000, you will have no internet drawdown. At least it was not like that way. They can change the rules. Sujivan still they have the trailing drawdown after the buffer. Can you please confirm that? I don't think so. They have the buffer after the trailing drawdown. If you are struggling with drawdown, then do one thing. Don't hold the trade. Close the trade to your partial level. Just simply close the trade. That means you will always go for 1:1. Just 1:1. Close the trade. You don't need to worry about the buffer. Just close it 1:1. So your stop loss is 22 handle. Take the or close the trade around 22 handle. Don't hold the partial or the runner until the buffer. And after the buffer, you will go back again to your own rules. Okay, take the partial, hold the trade as long as you want. But until the buffer, just close the trade around 1:1. This is the photo I took today's morning here. This is one, and I took it yesterday PM session. As I was inside, I went to the sea, and this girl, I mean, she was sitting over there. I took this photo while she was like sitting. It was the color was really so good, and this morning I just took this one over here. That bird is beautiful. I like how you catch quick actions. Yeah, sister. I was just sitting, and waiting when she will start to fly. And just click the burst. Got this one. No trailing drawdown after the buffer. Okay, thank you so much. Thank you, Reflect. Thank you, Suzivan. Don't copy trade. Okay, that is another thing. Don't copy trade. If you have five account, at least five account, you have to trade them differently. You will copy trade if you have more than five account. Then you will just make the group. But you have to have five options, five different account. If you copy trade 100 account, it means you are trading with one account. If you do something wrong, all of your account will get hurt, right? It's gonna disaster. It's gonna be disaster. So for having more accounts, it means you are having more options. If you do something wrong with your one account, you are going to make over that by 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 the other account. Okay, something like that. How to say that? I mean, just don't copy trade. Instead of that, go differently. My point is understandable, but still, if you have some confusion, just let me know. Just a second, guys. Before closing, okay, just fun time. Before just closing, I would love to show you some older one. Would be a good selling opportunity right now. Guys, I'm just done. Okay, I'm just going to close. But before closing, I would love to show you this pictures as well. I mean, she was so happy to run on these benches. I think that's gonna be good. She was just running on these benches again from here to there. Okay, from this area to this side to opposite side. That time I took that. That was the morning, and this one I just love to take this picture. Just the plane sometimes they leave some like this, the left, that was the I took yesterday from here. I'm learning, okay, guys. So yeah, I know that it's nothing, but I really love to take this type of photos. More likely, I love to take the photos for the people because they're really so good. They have a lot of expression. I love to take the photos from different people. But I feel shy sometimes to think that if they ask me why you are taking my photo, then they were just dancing yesterday. That was they're really good dancer. It was not the video, it just took the photo, but they're really good dancer. I think they're doing some kind of video, TikTok or something like that, Instagram, I guess. But that's cool. Okay, thank you so much for being over here. I'm done. Anybody has any question? If you have any questions, just let me know. Otherwise, I'm gonna close. That bird is beautiful. I like. Okay, thank you. No intraday trailing drawdown once over the buffer. Thank you, FL Trader. You can go for trade days, same payout rules like take profit trader and end of day trailing in funded. Yeah, reflect. I told that trade day and the take profit trader, they're almost same. But take profit trader is the best. They have no rules, simply no rules. But trade day, they have some rules, but you guys can try it, okay, as well. Just make sure you have you have used the code T2 wizard. Please make sure that you have used the code T2 wizard. Okay, TPT we need to hit 3K in a 50K account. No, you have to hit 2K buffer. That means $2,000. You have to make $2,000 to get rid of that trailing drawdown, brother. Thank you, Dora, for being over here. Thank you so much. I don't think so anybody has any question anymore. I think trade day has daily loss limit that take profit trader removed a while back. Yeah, I know that trade day has some rules. They have some rules, okay, but take profit trader simply no rules. You choose take profit trader, congratulations, brother. You are at the best area. Like take profit trader has no comparison. At least until now, there is no comparison. But trade day, they're also, man. I have the same code T2 wizard with the trade day as well. But still, I'm saying you to go with the take profit trader because they have no rules. Rules are the only thing that hold the traders to be a successful, to be successful. So that's why I'm saying trade day has some rules, but take profit trader no rules. No rules means no rules. Just no rules. Simple. Thank you so much, guys. So see you tomorrow, inshallah. God willing. Until then, cheers, guys.